In this video, traders, we are going to talk about I have no strategy. Where do I start? Stick around. Hey guys, warm welcome to you, and I bet they use that as a thumbnail, that last little bit. Hey guys, warm welcome to you. Thank you for joining me. Okay, so very common path for traders this. You start off trading. You come in, you go, yeah, I want to trade. You stick some money in your account. You win, lose, win, lose, win, lose, 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 and go, I don't think I really know what I'm doing. And by the way, a lot of people there go, I've had enough of it, I'm out. I lost money, not for me, didn't really enjoy that much, not interested. Majority of people that is. But then the next step is you guys. Or maybe you're a bit further on, but you've already in this step and you're like, okay, I need to seek some knowledge. You know, YouTube, tap, 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 and then maybe my video comes up, some other great guys, other channels' videos comes up, and you kind of learn a bit, and you sit there doing a bit of a binge on YouTube videos, and you like this guy, subscribe to this, hopefully you have subscribed to my channel. You should like and subscribe and all this kind of stuff. But you kind of know that you just don't have the strategy. You're like, I'm just shooting from the hip a bit. I've traded a lot of instruments, I trade this. So what do you do? What do you do? Because as human beings, right, we're bad when there's so many choices. And there's been studies on this, and there was I can't remember the book. There's a book I read about choices, and you know how it's far better if we just have one or two choices. And sometimes when we have very many, we get paralyzed and don't know what to do. And I think that's why all of the car dealers changed the way that they approach speccing up your vehicle. You know, if you go into an Audi dealership, for example, BMW, Merc dealership, or any other dealership, you go in and you say, hey, you know, I want this car. And they say, right, you've got a choice of, you know, maybe a few diesel engines, a few petrol engines, maybe they've got a hybrid or whatever. Fine. But where they struggled was the myriad and array of options you could have. You could have multicolored LEDs, you could have rear massage seats, front massage seats, you could have climate this, you could have that, you could have the other, you could have lane assist, you could have active cruise, you could have all this type of stuff, and it was just huge, massive checklist. And they were like, people are just getting confused. They're like, I don't even know if I want that. Do I want that? Do I not want that? And it was just confusing them. And so they started to bundle things into packs. They'd say, hey, that's a tech pack. You know, that's the lighting pack, that's the optic pack, that's the ski pack, and you just take a pack, you go in and say, well, actually, I quite like the multicolored LEDs, I quite like the active lane assist, I quite like the headlights, that whatever the headlights do, they go on and off automatic, or whatever it may be. You get the point, and so you go, what's that? Oh, that's the technology pack. Yeah, but I also get this and this. Okay, fine. And so they learned that as they improved with the cars and more and more options, they're just making customers confused. So they kind of configured it in packs. Now, of course, you can still spec different things, but they just literally made it easier for you and said, hey, most people spec this if they, you know, like to use the nav, or they like to use the virtual cockpit. The virtual cockpit is very nice. It comes with this pack, but you should spec that. Fine, you tick the box, you pay the extra, you get on with your day. So in trading, the parallels here, guys. I know you're still here waiting for it. You're waiting. It's like, it's going on. It's going to be here in a minute. Trading, you've got so much to choose from. I've got so many markets, so much this. So I think the best thing to do is just to pick something. Right, and don't put too much weight on this decision, because it doesn't actually matter. This doesn't actually matter, and it's unlikely to be the thing that you're still trading at the end of the year, then in 2 years, 3 years, 5 years, 10 years. You will change, and your method will start to be crafted, and that's the point. The point is to say, hey, what do I trade? When do I trade it? What's my time frame, and how much am I prepared to risk? And that's all right for now, because now you've got structure. Now you can operate in this area here, and all of this is chugging away. You've got orange juice futures, you've got corn, you've got Facebook, you've got Lloyd's Bank, you've got iron condors, you've got all this other stuff going on, and you'll say, no, I am going to trade yen pairs intraday, for example. And you stick with that for a bit, and you say, hey, you know what, I'm giving this, 10 days to see how I get on. And if you like it, you go, okay, actually I like it, but you know what, I prefer to hold a bit longer. And so you iterate and you move over and go, hey, I'm going to go to a swing trader. And then you do that for 10 days. And you say, actually, you know what? I quite like this. I'm going to, now don't chop and change too much, but just have some idea of what you're trading. So now you've got to start, right? You've got a starting point. It's like, okay, I know the instrument I'm trading, and I know the time frame I'm trading, and how much capital I'm going to risk. Okay, now what's your strategy? So your strategy now just needs to be something simple. And when I something simple, I mean a breakout strategy, a mean reversion strategy, which means buying at support, selling at resistance. Maybe you have a very simple strategy that says this: when the market gets to the prior day's high or low, I will decide to buy or sell. And you don't know what you're doing at the beginning, and don't overcomplicate things. Say, you know what, I'm going to sell a move to the prior high, and I'm going to decide whether to do it or not. I'm going to note down my findings. So you might say, okay, market's coming up to the previous high, prior day's high. Yeah, I'm going to sell it because I think that, we've done it quite early on in the day. We're in a downtrend on the daily, and that's all I've got. And your risk is X, and you write down this, and you sell it, and it moves down, you say, great, I made a profit. Or it moves up, you take a stop, say, and you start to note this stuff. Because at the beginning, just consider yourself 50-50 at the beginning. Say, hey, if I can make it a 50-50 and be disciplined with my risk, that's going to help me learn for free, because I'm going to win some, lose some, win some, lose some, win some, lose some, lose some spread. It's not going to be very expensive. But then you can iterate from that. You can go, hey, you know what? I don't really like just kind of mean reversion. I like breakouts. I like waiting for momentum. Okay, so what defines momentum? And you start to iterate your plan and improve your plan. So just going back to the summary, guys, is pick a market, pick a time frame, or a couple of markets in a time frame, and then come up with a single strategy. You've basically got two buckets of strategy. I talked about this more in depth, but you've got trend following or mean reversion. So in other words, momentum or mean reversion, sometimes with momentums and breakout, basically means an inside out trade. So in other words, if the market is doing this and you're buying here for a move back out, that's an inside out trade. If the market is doing this and you're selling here for a move back in, that's an outside in trade. Outside in generally mean reversion, inside out generally trend following momentum. Pick one, because they're completely different skill set. Well, not completely different, but there's a subtly different skill set. Pick one and say, you know what, I quite like trend trading. I quite like these inside out type trades. So I'm going to look for places to buy pullbacks. So there you go, there's your strategy. Already you've got it. It's like yen pairs, intraday, buying pullbacks on a trend. Okay, that's it. Now you've got to work out how you identify your trend, and you've got to work out what a pullback is, and you've got to work out some nuances, but that's the broad strategy there. Let's scratch that out and think of something new. You go, actually, you know what? I'm going to trade outside in, mean reversion on the European and US indices. So FTSE, DAX, Dow, NASDAQ. Great. So that's your strategy. But now the next step is, well, where do I start to do that? Well, prior day's high. How about a decent resistance level in a downtrend? How about stretch away from the VWAP? All this kind of stuff, and dig around and find some stuff for yourself, guys. There's loads of strategies out there that are effective and work, depending on how you deploy them, but they're the good seed. And your job as a trader is to start with a strategy, is to dig the hole in the soil and go, right, there's the first seed. And then you kind of grow it and go, you know what, I need to do something different. I need something else. So you plant something else. And you learn by each time you plant a new seed. But the point, bad analogy, but I think you get the idea. The point is to just commit to something and don't be afraid that it's not going to work, because it's not going to work. and that's the point. It's learning from it so you can improve it. Now, if it does work and you kind of hit something that works, then great, run it until it breaks, and then work out why it's broken, try and fix it. Market conditions change, etc., etc., etc. So don't be frightened about just picking anything, and don't think, oh, it's such an important decision, because you'll change. But just pick your market, pick your time frame, pick inside out or outside in. There you go. There's your broad strategy, and from there you can add some nuance if you like. But ultimately, guys, final thing, the market can't harm you or hurt you if you stick to your risk. If you say you were going to risk $100 on this trade and you stop yourself out $100 each time, then that's all the market damage can do, and you're happy with that. Maybe it's $10, maybe start off with, whatever. But it can't damage you. And you're learning, and you're learning, and you're learning, and you're learning. And if you're going with the expectation of, hey, I need to learn for 10, I need to learn for another 10 days, another 10, another 10, that takes the pressure off to perform. You're like, okay, well, actually, I'm learning. I'm observing this person doing surgery. I'm not actually doing the surgery, I'm observing. And that's exactly what how you should wrap it up in your mind. So do that. Well, you can do that if you like. I think that's a good way of doing it. I think it's kind of get going, get moving, get some sort of strategy in place. Just commit to something to start with, and then you can add bits to it, take things off. But if you start with something, which a good thing is you can pick, then who knows where it'll be in a couple of months' time. Could be anything, but at least you're kind of starting to feel the type of trader you are, type of personality you are, what you like trading, time you can devote to trading, all the other stuff, which sometimes you don't figure out until you're actually in the heat of the moment, you've got some skin in the game, and you're making some money and losing some money. All right, guys, take care. See you next one. Bye-bye.